All right, welcome back for the episode of Carnivore Trades. Today is Wednesday, March 29th, 2023. If you're not done so already, please give you a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, let's get into it here today. So markets having a nice gap up this morning, and that was on the back of higher bond yields. I almost said lower bond yields, but higher bond yields, and that's something that we at least lately, have not been accustomed to seeing here. To see the two-year note down 6 basis points there, and the two-year yield at 4.087 currently. The 10-year via the TNX, that yield is at 3.566 now. They're on the TNX rather, and you can see the ZN coming in there, and the ZB coming in, but they are off the lows. But right now, that might be confusing, and I talked about this a little bit in the short that I did earlier. It might be confusing, but essentially the thought process here is that if yields are coming in, it means there's less fear, right? Or if yields are going up, that means there's less fear, right? So when you have a banking crisis, people are going to flood into the U.S., 30-year specifically. But you're seeing KRE get a bid here. It actually did dip negative, but came decently off the lows there. The XLF has been strong really all day long, so up just about 1.4 there, and we talked about this yesterday. I said, look, it needs to kind of get going. You want to see a V shape here, and the same thing with the Russell, and that's finally getting a nice bid as well, although it is off the highs of the day for what that's worth. But I mentioned the Russell because it has a lot of regional banks in it. But point is, you see stabilization here, and you'll see fear kind of subside a little bit. Speaking of fear, gold coming in off the highs here after that rollover, contract rollover there. But it did come off the highs. So again, seeing kind of a little bit of alleviation here. The VIX gapping down as well. So, I think it's a little oversold here. And I want to talk about this also going into tomorrow. We have some GDP numbers and I believe initial claims. So that will be market moving. The one thing I'd be concerned about as a bull here, I don't see any problems technically right now with the market. By the way, look at the volume here. This is absolutely peanuts. But we're above that 50 MA. We got above both of these trend lines, so that's a good sign in the short term. The only problem I would have right now, and I'd be nervous about, is we gap up 395.50 to 400 on the spiders, and now we're just squeezing up here before GDP. Doesn't that feel a little trappy? It does feel a little trappy to me. And there's a lot of real estate if that number comes in, hot or, too cold, for instance. But right now, I don't really see any problems with the market, and I think even if it pulls back, I think it does have one more push up here. Like I've been saying over the last week or so, ever since really that candle this should have been a power reversal, and it just tells me that too many people were ready for it. We had a cycle date there. Sometimes these things filter through the internet some way, somehow. Not saying that I know I'm not the only one that does this stuff. So these things kind of tend to, play themselves out. And if the more people are prepared for it, the more hedges there are. And I've said this over the last week, there's a lot of hedges, right? So it's hard for the market to go down, even when there's bad news. Now, if you get something out of Black Swan, left field, then, it could change. But right now, the market's hanging in there, and we'll give it the benefit of the doubt. So we're basically knocking on the door of this 402.49 area. Again, resistance there. That was the big, KRE dump day right there on the 9th. And that was at 401.48. We're not that far off of that. And then 402.49. Again, we're not far off of that as well. If we clean these lines up, you can almost, make a case. Yeah, that's kind of sloppy, but you can almost make a case. You got an ascending triangle. If I can just draw this in. There we go. Thank you. So, nothing terrible there. And again, like I've said, I do think this market has one more push up here. Down the road, obviously, you guys know my stance hasn't changed. We will make new lows, but we're not there yet. What's the next shoe to drop? What could that be that gets us down there? Well, I think the market, right now it's obsessed with disinflation and obsessed with getting that disinflation. I'm in the camp that inflation is secular now, not cyclical, and I believe that the deflation that may or may not occur coming up here with the aggressiveness of the rate hikes is going to possibly give the market, something to rally off of. And then you're going to see the Fed maybe pause, maybe cut rates by a small amount, but the market's going to freak out then. And that's not just because every single bear market in history, the Fed pivot is the worst sell-off, but mainly because I think the market's going to realize the Fed's not coming to the rescue here with inflation being secular. Anyways, this is just stuff down the road here. Right now, markets are hanging in there. It's a really slow week news-wise. Again, like we said, jobs tomorrow, but that's really all I see right now. Technically, the market's hanging in there, and we'll respect it. Triple Q's getting a nice bid. Let's look at the semis. So SMH up 3.5. I still don't see a ton of upside here. Micron, obviously, which we talked about yesterday, that is up over 8%, so getting a nice pop here. This has some resistance up here around 65, but, it's had a nice pullback and a higher low, so we'll respect it for now. Again, I just don't see a lot of upside here in the semis. But the triple Qs, they're hanging in there. If we get another pop, again, I say this all the time, 321, 322, that's going to be a major zone there of resistance on the daily. As far as the Russell, we talked about that a little bit earlier. It is, having a nice bid today, but I don't like that lower high there intraday. There's a little bit of, it's not the greatest look, just... We talked about it, I want to see a V shape off the lows, and it's shaping up a little bit better now, but I'd prefer to see this leading rather than the spiders and the Dow and the NASDAQ. But, for right now, it's holding up. We'll just leave it at that. Dow also getting a bit here, still has resistance at 327.56 and then 330 and 331. Those are major levels. 50 moving average down sloping there as well. Okay, we mentioned the semis already. Cloud is really holding up here. Cloud's been a strong sector here, specifically mainly Oracle. That's been a market leader here lately. Take a look at this move off the lows here, $60 to $90. It's an incredible move there, about 50% off the lows. For a stock the size of Oracle, that's it's a pretty big move. But IGV, and then we obviously CRM's earnings last quarter, that's above that pivot now. That's another thing too. Another reason why we're in kind of a lull, we have earnings coming up soon. So the market's kind of looking to anticipate that. NVIDIA reports a little bit later than most, but I am very intrigued to see what this does in the earnings, because they just basically priced in the best quarter of all time. But anyways, without getting on too much of a tangent here, IGV above this pivot, that is a positive. We'll see if it can get up to that 300 handle. Maybe even by the end of the week if we get a really good pump there. All right, transports here acting a little bit better. Still not a great chart pattern though. Down move, still inside of this area. So this is all just bearish chop until proven otherwise. You get above 14,139, it gets a little bit better, but you'll still have resistance at this pivot, and then you've got the moving averages above that. So, it's holding up as long as the market holds up, but definitely not a market leader here, and we should definitely take note of that. All right, over to housing here. We already talked about rates. 30-year is coming in a little bit here. The note, so yield is actually bidding up a little bit though. But XHB, again, nothing's changed. Still a bearish pattern here. On the daily, ITB, same thing. VNQ finally getting a bid. Yeah, we'll give it a golf clap there. Up 2%, up move, 1-2 pullback, and then a bid. So finally getting up off the canvas a little bit. But this still has resistance at 80.50 and that 20-day moving average. This is not a strong name, really. Any way you look at it, you almost basically tested the October lows. So again, not a strong chart, as we all know. XLF finally getting a bid up here again. Up move, 1-2 pullback, and then a pop here. This will have resistance at 32 and a quarter, as well as that down 20 moving average down sloping there. If this consolidates, it can get through it, but right now this 20 moving average would be major resistance if we were to test it here. XPD, broker dealers, nice bid. Again, 20 down sloping, nothing's changed here. Still kind of a bearish pattern there on the daily time frame. Energy here over to crude. So crude pulling back off that trend line. We talked about this area here. You get a flush, and I know there was a lot of talk about oil shorts and everything, but this is why you don't chase it. So it's getting a nice bid off the lows, and what you do is you just short the back test, and that's what I did, as I've already disclosed that, as you guys are aware. Could it get up to the 20 moving average? I definitely think it can, but that's a good that would be kind of max move there on the weekly. But right now, getting a little reaction off of that trend line, and remember that is a trend line that goes back to 2021. So If this pulls back in here, it's not going to be, it's going to need, if you're bullish oil right now, you want to see it just go sideways to set up an ABC up. But I already think it did an ABC up here. And, if you get back down below 70, it's back down to the lows, and then it's $60. So I'm not a bull on crude right now, as, everybody's aware. But, we'll continue to watch that going into the end of the week. XLE getting a nice bid. So we've got above that little channel we talked about yesterday. So that's a small positive. Again, 200 moving average, as well as this 82.75 area. That will be resistance there on the daily time frame XOP. That is into res 2, 20 moving average, and that kind of, bear flag channel there. So we'll watch that going into tomorrow. That should pull back. And OIH also coming off the highs. Very volatile pattern here. It finally hit the 250 target, as we talked about. But 280 is resistance, and notice how you have that 20 moving average not far behind it with that gap. So not a lot of upside here, at least in the short term, on the OIH. Over to Natty here. So Natty getting a nice bid. Obviously, the contango gap rolling over to the K contract. I want to draw your attention to this falling wedge. And, it's like, I'm trying to think of an analogy here. Any win's a win, I guess, right? Like, it doesn't matter how you get out of this wedge, you get out of it. But nice move there. And, for once, the hourly dips are being bought. So we'll give it the benefit of the doubt. You did get that hourly close above this, above that overnight area. And, all things considered, this is just consolidating here on the hourly time frame. And the 4-hour looks okay, too. If you consolidate a little bit more and get through that 50, this can get up to 235. So, one day at a time here. If this gets follow through tomorrow, though, you may have a W bottom in place. So we'll be watching that. Take a look at the weekly. You can see right there, if you get follow through tomorrow and into Friday, that's a W bottom, which is a powerful move. So we'll watch that going into the end of the week. But Nat Gas finally getting up off the canvas as well. Dollar index here, kind of a nothing burger. Again, I don't have a bias on the DXY right now. A lot of little dojis here. Equal buyers and sellers. Look at this kind of just very indecisive range here. Again, I like this better at double bottom, maybe a little bit lower. So we'll be on watch for that. Gold here, we talked about a little bit earlier. Came off the highs. Still have an inside bar here, so we'll respect that for the time being. But if this loses this, that is a huge no-no, huge negative. Again, 1962.50 on Friday's close is really all I care about when it comes to gold. Silver holding up well. It's really overbought, but it's holding up. If this flags, I mean, could it go higher? Yeah, but this is this right here. A lot of people were calling for a breakout, right? So you had an up move and then sideways, and that failed. Now we're back testing. So what do you think the people that are going to do that were buyers here? Right, they're going to be sellers. So I just don't see a ton of upside here. But it's a commodity. We know that. It can overshoot. These things happen. So I'm not doing anything with it at the moment. But just be aware it is into resistance currently. Platinum able to hold that 960.40 level. So it's holding up okay for now. If it loses that, it's going to go lower. If not, it's got some work to do to trade its way back to 1,000. If it can break out above this area, then 1040. So nothing's changed there. Copper here, trying to consolidate. So you do have resistance right with this red bar, and it's trying to consolidate. So I can't rule out one more pop in copper, maybe to 418, 420. That's really all I see at the moment, though. But copper daily pattern does look a little bit better. I still think it has to go down to 375. All right, then lastly over to Bitcoin here. So Bitcoin holding up nicely. Again, they just keep defending that level. We talked about that yesterday, 26,926, and you got a pop. So it's hanging in there okay. Again, you guys know that if this consolidates, it can get to 30,000. That's really all I see at the moment here, but it's holding up okay. If it breaks that level, though, it's going to go much lower. But you get the 20 moving average starting to catch up to price, so maybe it can get up into that area. I just see, honestly, not a lot of upside. There's just a ton of weekly resistance here. So, and you're, still kind of overbought going into it. So just be careful with it here, but it's holding up. We'll respect it. All right, lastly, over to the spiders here one last time. So we're getting a little bit of a pop here into the close, about 15 minutes left. We have GDP tomorrow. We'll see what that brings. Again, this kind of pump job that leaves me a little kind of concerned here. They're just hammering the VIX. So with volatility, if you're a bull, you want to see the VIX up ahead of a GDP number generally. And that's kind of the opposite of what's happening right now. So I definitely could see some type of retrace. We have a pretty fat gap here. So I can't rule out a sell here. But outside of that, I don't really see too many problems with the market. As long as volume remains light, we'll give it the neutral to upside bias. Anyways, guys, going to wrap it up here. You guys take care. Come find me at carnivoretrades.com. We'll talk to you all tomorrow.